Hey guys, welcome to another episode of Thinking Like a Bank, where we show you how to think like a bank using the same strategies and principles that banks use to help you find more financial freedom in your life. I'm your host, Sarah Ibrahim. I love talking about mindset and mindset shifts. I think it's been a major requirement for becoming a bank on yourself professional and helping people reach their financial goals. It definitely takes a mindset shift to look at the bank on yourself concept differently, which is why I have today's special guest with us. His name is Darrell Evans. He's a serial entrepreneur, investor, and co-founder of Yokel Local Internet Marketing. He and his team have helped entrepreneurs and companies generate over $300 million in revenue online since 2011. He's personally started and operated 6 businesses since the age of 20. He's also the host of the MindShift Podcast, which launched in 2019, and is the founder of the Mindshift Business Accelerator and the Mindshift Growth Mastermind. He is passionate about entrepreneurship. When he appears on podcasts, he loves sharing the lessons, mistakes, and breakthrough frameworks that have helped him and hundreds of other businesses market profitably, grow sales predictably, and build superstar teams. His goal is to help your entrepreneurial audience grab at least one mind shift that could launch them to their next level of success. Darrell, welcome to the show.
Sorry, good Lord, that introduction, man. I got to live up to that now. Thanks for having me, man.
Thank you for joining us. I'm excited to talk about mindsets and mind shift and your background. Let's start with that. Tell us about your background and how you got into the space.
Wow. So the background story would be far longer than we have for the show, but let me give you the cliff notes. So I always say that my origin story for entrepreneurship started actually on the football field or the sports environment. So I grew up playing sports, baseball, football, and I'll kind of tie that in as we go. But my entrepreneurial thoughts, though, came around the age of 15, 16. And I remember going to the grocery store with my mom. And for whatever reason, I never wanted to be in the grocery store, except that I wanted to go to the magazine rack. And my mind always went to, and my eyes always gravitated to Entrepreneur, Forbes, Inc., Business Opportunity, things of that nature. And I would just spend time over there while she's grocery shopping. Mm-hmm. And so there was an entrepreneurial bug there somewhere. And I remember my first little hack, like I needed some money in high school. And this was before I got my first job in high school. And I remember my buddy and I, we used to go to this place called Smart and Final, which is like Costco. And you'd buy bulk candy. And so what we would do is buy now and later. So we're in Las Vegas, right? So during school in Vegas, it's kind of hot just to keep candy bars in your locker. They're just going to melt. So we had a kind of a knack for customer service and customer experience. So we would buy now and later's, Skittles, things that wouldn't melt while they're in the locker. And so in between class, we'd sell candy. It wasn't probably appropriate because they had a school snack shack where you're supposed to go buy that stuff, but we were selling it cheaper than the snack shack. So that's maybe the origin story of my first little venture. That's not a job. That wasn't a business, of course. Anyway, I went to college. I got a job at Taco Bell early in my days, and I really learned a lot. I excelled in that fast food environment to become a general manager around 20. And then it was kind of interesting that same year I started my first business, which I was into sports, as I mentioned. So shout out to the Lakers, the Dodgers, and the Rams. And so I was just a guy who always wore sports stuff, whether it was my school stuff for my Rancho Rams team or all my pro teams, right? And so I said, I'd like to sell this stuff. Like that's a clue too. When you start a business, you got to be passionate about what it is you're selling. Mm-hmm. You can't just be making stuff up. And so I started selling clothes and hats and sportswear out of the trunk of my car at a swap meet, because that was, this is pre-Shopify, pre-Amazon. So this is 91, 2, somewhere in that neighborhood, 1991, that is. And that was just kind of the spark, because I could go into this, I could rent this space at the swap meet for, I don't know, $100 a weekend. And I could come out making $250, and my cost of goods, were, I was profitable on a 2-day trip to the swap meet. And I'm like, this is neat. So that was sort of my earlier thing. I went ahead and went back to school though. I stopped school for a couple of years, went back to school, got my degree in finance. And it was around, when I took my full entrepreneurial plunge, was around 2000. So roughly 21 years ago. And interestingly enough, that ties into the mind shift aspect of it, is that I started as an entrepreneur and also had another challenge going on in my life. I had 2 children at the time. Their mother and I split. And she decided to move closer to her family in Texas. So we were 1,075 miles apart. And so part of my backstory is my father decided not to be in my life, my birth father, my blood father. And I just didn't want that to be the case for my kids. So I had to figure out how to be a parent a father from 1,075 miles away in a pre-iPhone, pre-FaceTime, right? The kids are 8 and 2. They can't get on the phone and hold a conversation. Mom and I were okay at that time. We got better. I mean, we ended up being great co-parents. It worked out great. But then I wanted this entrepreneurial passion. So I really had to figure out how to do a few things. And it shines through the MindShift podcast. And that is, I had to figure out how to make peace with the facts. I had to figure out then what was my decision with the facts. What was I going to do going forward? I then had to make a plan for how I was going to both be a parent as well as an entrepreneur and deal with the financial pressure of traveling back and forth to Texas, traveling them, all this other stuff. And then I just had to figure out how to make it happen. And that's an evolution of the MindShift podcast and how I operate business, how I operate life. Every big decision I make, it's those 4 steps. I call it the MindShift method. But fast forward to today, we started a company 2011. We're in the digital marketing space. And we've been helping companies, as you mentioned in the intro, grow. I was an early adopter to online marketing 2002. At that time, I was in the mortgage industry. And I just understood leverage. I just figured out like, okay, you're going to give me an ability to send an email and put it on a timed system. So I don't have to say the same thing over and over. I was hooked. I'm like, I got, you're in the insurance world. You speak to people all the time about the same things, the same concerns, the same issues, the same. And I said, this is interesting. So I took to email marketing in 2002. I was an early adopter to social media, 2006 on LinkedIn, started my first YouTube channel in 07, Twitter in 08, Facebook 09. The story goes, I started running ads on Facebook 2012 when they went public. And it's just, I get it. And I just don't know why a lot of business. So we spent all day helping business owners transition from offline to online for growth and scale. So I was a long-winded story, but that's a bit of the backstory in as quick as I could tell it.
Yeah, that definitely. Thank you for sharing that. I could tell that you've always been like moving forward, like no matter what's happened in life, you have a plan for, all right, how do I pivot? How do I figure this out? How do I, figure out entrepreneurship while staying involved in your kids' lives? That's awesome. You're always like constantly pivoting forward. And I think that's part of, like you said, the mind shift. That's part of the mind shift. So how does, for example, from a business standpoint, how can a business or an entrepreneur, I guess both interchangeably, how could they shift their minds? What could they do differently to think differently to reach their goals?
So I think the first thing with businesses that I find, and I don't know, tell me if this is going the direction you wanted it to with the question. I'm just going to focus on the last 11 years. The last 11 years, now working with thousands of companies, whether they hired us or whether we've coached them, consulted them, talked to them at a seminar, training, workshop, webinar, whatever it may be. What I find first entrepreneurs are struggling with is that they don't know what they don't know, and they need to admit what they don't know. And sometimes that's a struggle because as entrepreneurs, we like to be proud of the fact that we figure things out, that we hustle, that we learn, that we're always willing to grow. We're usually students of personal development, but sometimes in that idea of being a good expert at what we do, we just sometimes are a little bit too egotistical to say, I don't know what I'm doing. So I'm going to go spend time on YouTube University and waste a lot of time and energy over there, right? They're going to jump on 18 webinars and be sitting there to get good but incomplete information so they can go get the pitch at the end, and then they go buy $1,000 thing, a course or whatever. And I'm not saying those things are bad. I'm just saying get your breakthrough is on the other side of you working with someone who's done it over and over and over again. If I want to learn how to become a world-class chef, bet your bottom dollar I'm going to find my way as fast as I can, if possible, to get to Gordon Ramsay, right? I'm not fooling around with YouTube videos. Right? So I think that's a big shift early on for entrepreneurs to get a breakthrough. It's just like, hey, you're going to spend more money in the time that you're trying to figure it out versus this is one of the biggest breakthroughs for me. Sari, I hired my first coach in 2002. When did I say I went full-time in entrepreneurship? Full-time in entrepreneurship was in 2000. 2 years later, I'm doing really well, but I'm struggling. There's a paradox there. I'm doing really well, but I'm struggling. I'm selling, I'm making money, my business is growing, and I'm working 6 a.m. until midnight. That's a problem. Something's out of balance. That can't go on for a long period of time. So one of the first things I ever did was hire a coach. And I've had a coach now, coach, mentor, advisor for the last 21 years, even though I'm at the level that I'm at today, which is still a long way to go from where I want to be. But that's one of those earlier things. So there's two quick ideas.
Yeah, definitely. So I like that a lot. It's kind of reminds me of the book, Who Not How. Like instead of having to figure out digital marketing, like you said, and figure out all these different pieces, you find somebody who's already done it, who's done it ahead of you, who's doing it on a major scale, and you hire them. And then also on the coaching side, I'm also an advocate of coaching. I've hired of like almost 5 coaches in the last 6 years for different areas, whether it was startup, whether it was sales and marketing, whether it was different areas. And definitely that I'm an advocate of that. And I think also too on the financial planning side too, like I consider myself more as a financial coach rather than just a financial professional. So I and there's a difference between that. A coach is somebody who works with you and you figure out what you want to do and then you own that. So like in other words, a coach will ask you, what is it that you want to accomplish and why is it and how are you going to do it? And then when you answer all those things, you now own that. Whereas a consultant or advisor just simply tells you this is the solution, this is the plan for you. So I definitely like that a lot. I think
let me throw something in off the back of that. And what I love about what you do, and just because you and I almost went down a similar path to what you do, which is why I respect what you do, is you're not just in the industry to sell something, right? You're not just you're trying to build a plan for the future of your client, and it takes thoughtfulness, it takes literacy, it takes education. Anybody can sell quote unquote financial services, insurance, etc., wealth products, but there's a difference and a distinction. You have to be a different person. You have to have a different mission like you do to sit down with someone and really help them think about the hard things, right? And build a plan. And I just wanted to tack that onto that with what you said, because it's more to it.
Oh yeah, definitely. Yeah, thanks for adding that on there. Exactly. It's almost like, functions over just the title of the tools. Instead of just saying we're going to sell this packaged product, it's what is this? What could this potentially do for you? And is it relevant to your situation? Yeah. Thank you for sharing that. And let's talk about financials right now. A little bit of it is, part of what we do, the bank on yourself concept, also known as the infinite banking concept. Do you have any experience with cash value life insurance? And if so, like how has it helped you?
Yeah, so I was introduced to it in 1997. Spent a little time at a company called Northwestern Mutual right out of college, and got informed on the power of it. And as I learned about the way it fits into a financial portfolio, the way it fits into an overall structure of a good financial plan. And so, of course, I bought it because obviously I had children, so I needed life insurance anyway. So. I bought into the idea of the consistency, the opportunity, right? High dividends paid. I don't want to get into the technicals because I don't know all of the technicals, but yes. And so how did that play out over a decade, even for the first decade or so? I mean, if I fast forward to 2008, I built up some cash values in my policies, obviously, along with other investments, hard assets, real estate, things like that. I had business. But the reality of the market was I owned a mortgage company in 2008. And in the 2008, it started in 2007 as a business owner in the mortgage industry. For consumers, the crash didn't really get felt until, late 08, 9. But as an industry professional, we were getting squeezed starting in 07. And what do I mean by getting squeezed? Our cash flows were getting tight. Banks were tightening up credit. They were restricting our credit lines. I don't have time to tell you the whole story, but the lenders that were taking advantage of quote unquote the world were also taking advantage of small brokers like us, because they were changing the rules on the fly. For example, if you were in process for a home loan and you qualified today, you could not qualify tomorrow for the simple fact that they changed the rule. And so having said all that, I had to lean on those cash values. Those cash values came in at a timely place for me, because banks weren't lending. When your business tips over in sales, and this is a banking concept. If the bank will give you money or extend your lines of credit when you don't need it. The minute your sales tip over 5%, 10%, 15%, it doesn't have to crash your business. They wonder why, because the only reason they're going to give you the loan, if they're semi-guaranteed you can pay it back. If your business tips over, which ours did in 07, they would not give us any credit. They would, in fact, they started restricting credit. I remember a $100,000 credit line that got cut to the limit. So, the credit limit was $100,000. The balance at the time was 28,000 or whatever.
Yeah.
And they dropped the limit overnight from 100,000 to 28,000. And I had no more credit, just like that. And if you don't read the fine print in the banking, they can do it. And we found out the hard way. So long story short, my cash values, I was able to tap into those. I didn't necessarily want to, but they were available. So the move and the decision to do that and implement that into my plan really gave me some cushion during those really tough times. Now, the market got worse, of course, but that was a very valuable asset for me to be able to rely on when the banks were essentially pulling the plug on everything.
Yeah, two things I want to add on to that. So sure. Mark Twain was right. A banker is a fellow who will loan you an umbrella when the sun is shining, but wants it back the second it starts raining.
Yes.
And the second thing is that you're right. So a lot of people, when it comes to financing, and I see this a lot with clients and prospects that I talk to, is that it's kind of one sided. It's like, all right, I have good credit today, so I can qualify for a loan. And it's not always that angle too, is that you could have the best credit, the income, the collateral, everything, but the opposite might happen. The bank might not be in the situation to loan out money because, like you said, they don't want to. It's their guidelines. They could change. They've written the terms and conditions so that way it's in their favor, which is from an entrepreneur standpoint, that's problematic. That's like saying you're going to have a business partner, but the business partner you're going into business with could change the terms and conditions throughout the business. That's problematic. That's a sign of a huge issue that could happen. So that's one potential thing. And this is where the use of cash value life insurance comes in, is that when you borrow against your life insurance policies, you're borrowing from the insurance companies, and the insurance companies don't have the same guidelines that banks do, nor do they have the same terms. So in other words, if I have $100,000 in a cash value life insurance policy, I could borrow up to $95,000 or 95%. And the only collateral the insurance company needs is just the policy itself. They don't need my W-2s. They don't need my 1099s. They don't need my tax returns, my personal credit, my credit history, none of that.
They didn't ask me for nothing.
Exactly. So I love that you shared that. Yeah. Thank you so much for sharing that.
They didn't ask me for nothing. And not only that, the other side of it is the terms were interesting, right? So you can't take it all the cash value out. I was able to, cash got tough during those years for about a year, about 11. Cash got tough for about 12 to 15 months. I mean, when I say tough, I mean tough. The interesting part was the policy was able to pay for itself for a good period of time. I never had to write a check back for a while. And I'm not saying that's the right thing to do. What I'm simply saying is I had flexibility when the banks ruined my credit. I'd never made a bad payment. I'd never made a late payment. Mm-hmm. Mm-hmm. So let's talk about that for a second. I hadn't made a late payment. I was a 720, 750, whatever the FICO score was. And all of my credit lines got cut the minute the market started to collapse. So if I had $100,000 in available credit and they cut it, if your audience knows anything about the FICO score system, it's best to keep your balances, to keep the highest credit scores. One of the factors is keep your balances under 30% of your credit limit. So for math, if it's $100,000 credit limit or $1,000 credit limit, let's say your balance should be under $300. Well, Darrell, why would I do that? If they give me $1,000, this was a hard lesson I learned coming out of in the 90s. Why should I just keep the limit at 30% or my use at 30%? Well, that's because they give you the highest credit score. So here's what they did. And to your point, they lowered my credit limit from 100 to 28, which was the balance at the time. Now my card is 100% maxed out. Let me tell you what the follow-up effect was. I had an American Express card. That wasn't American Express. I had another card. It was an American Express card. American Express has tougher credit guidelines. American Express gets a note through the credit system that now I'm maxed out. Now, all of a sudden, I'm a high-risk borrower. Guess what they did? They cut my card completely off.
Wow.
It was so bad. Sorry, I had made a late payment. I was a perfect credit score. I overnight, you don't hear about this in the news. You didn't hear about this in the real estate collapse. You heard about the lenders that were doing predatory lending. They crushed us. And I'm not going back there to tell a bad story, but I learned. I got caught in the middle of that because I didn't understand enough. I understand more now. And I just think that what we're talking about today is these risks are out there and they're only your friend until they're not. I love what you said about the Mark Twain quote. You can have it when it's sunny, but,
Yeah.
but when it's
Yep.
raining, and by the way, I know you didn't cause the rain, but give me the thing back. So anyway,
Yep. No, exactly. Yeah. And I love how you say that. Like you were, perfect with your payments. You were honest. You were honest, a borrower. You paid back everything on time, but they just literally squeezed you and put you in a situation. And like how, for example, it went from one bank to American Express and then probably even kept going at that point.
it didn't wait. Yeah, Bank of America was next. Chase was next. My whole credit lines, all of them got either frozen or reduced. It was because of them, not me.
Yeah.
And then it ended up, it affected everything, because think about it. If I could get a loan from a bank, which you can't, right? My score goes from 7, whatever. I wasn't checking my credit on a regular basis, but I was in the industry. I would check my credit like once a year. So I would always be 720, 740. All of a sudden now I'm a 620, 630. I ain't missed a payment, but now I'm high risk because my balances are maxed out. So the cash value, just to tip that off, came in handy. And again, to the point of getting access to the cash, it was simple. There was no credit scores. It was sign a piece of paper, and the dollars were forwarded out for me to utilize in the business. And so it's a tool. It's a tool, and it should be looked at as a tool, right? As a function of your overall. We're not talking bad about credit cards. We're not talking about credit lines. Those things are important, but just one more tool that you can put in your shed as an entrepreneur.
Exactly. I love that. One tool that's not going to be affected by market conditions and by lending guidelines. So at least one thing. So yeah, obviously, business owners, we still leverage that. We're still using, low interest loans and other things like that. But if we could have one thing in the middle, that if another 2008 happens tomorrow, where all the markets crash, values drop by over 50%, 401ks, IRAs, all these things drop, you have one thing that doesn't drop with everything else. So, and then from the standpoint of competition, if all your competition is using lines of credit and all lines of credit get dropped, like what happened with you, but you have a cash value life insurance policy, for example, a tool that's not in that mix, then guess what? Now you have the advantage. Now you can go buy businesses for half the value. I know it sounds bad. You're taking advantage of like a depression or recession now, but at the same time, I'm talking from an entrepreneurial standpoint, is that you have something that's not in the same mix of pool as other assets that have collapsed with everybody else. You have something that you have an edge now, that you could do different things. You could still market, you can still advertise, you can buy other businesses, you could still move.
The wealthiest among us know this tool.
Yeah.
The wealthiest, let me say it again, the wealthiest among us have been using this tool for a long time. And, access to this information, of course, through people like yourself. And I know even during my little short stint, it's tough because it goes against the paradigm of how we've been taught. And we don't have time to get into how we've been taught through our educational system, because our educational system doesn't teach us this stuff. See, financial literacy is not a requirement to graduate from high school. It's not even a requirement to graduate from college. I have a finance degree and didn't learn this. So you have to go seek the information. As an entrepreneur, you have to protect yourself. Your business is an asset. Yes, we love to put our time and energy, our money into our asset, which is the business. But the reality is we have to have a balance. There's only 3 or 4 assets that you have to really keep your hands on at all times. And this is just one of those tools, again, in that financial asset pool that is important. So just got to be educated, got to get educated, constantly grab the information. Even if you're not ready for the information at the moment, let it sink in. Sometimes something will sit. I have this in the digital marketing space. Someone comes to me and they'll say, I want to do SEO. Darrell, I need to have my website on the first page of Google. It's a common request. And the reason it's a common request because it's popular. Or I need to have fans on my Facebook page. I don't have any fans on my Facebook page. Let me get some fans on my Facebook page. And my first question is why do you need that? And they just don't know what they don't know. Going back to something I said earlier, they don't know what they don't know. So our job as educators, we're not selling you anything unless we understand how it could impact the benefit of your overall goal. I always like to say, let's draw out your ultimate scenario first and figure out what does that ultimate scenario look like? Meaning, if we were sitting here a year from now, 2 years from now, 3 years from now, and we were looking back, what kinds of things would had to have happened in your business, in your sales, in the growth of your team, in your profitability for you to feel like that was a success, that was a successful period of time? I don't want to talk about, you're not going to tell me I was ranking on the first page of Google.
Yeah, yeah.
Right. You're not going to tell me, well, I have 1 million Facebook fans. That's just not. Now, that might be a tool for us to
Yeah.
grow your brand and your reach and your visibility, but that's not the end goal. So let's get to begin, Stephen Covey, let's begin with the end in mind.
Yes.
For whatever period of time we're going to work together. In my work, it's a year. The minimum is a year. Let's start there and let's build the process backwards. Maybe SEO matters. Maybe Facebook matters. Maybe Google ads matter. Email is definitely going to matter. There are certain things that just are deliverables, like going into a restaurant. You can't go to a steakhouse and steak isn't part of the basic steak's required, right?
Yeah. Yep.
There are certain things required in my work, but I don't work from that technical. I don't work from a deliverable standpoint. No more than you work from an insurance policy standpoint, right? It's what's the goal? Where are we trying to go? And if people don't jive with that with me, we don't work together. It's just easy. There's enough people chasing the commoditized world. I'm not a commodity. We don't do commodity work. We do big thinking work. Look, we don't 300 million. I had to stop talking about the number because of, just issues with the FTC. But the reality is you can't, give me 1 second. I apologize.
Sure. No problem.
You can't make these claims without the companies backing it up. And so we just said, let's stop making the claim after they start. So long story short, we're way past 300 million. Like that doesn't happen overnight. And by the way, these aren't the companies you see on television. These are small, mid-sized companies. These are entrepreneurial firms like me and you. I live in that market. I love that market. There's nothing wrong with the big companies. We have had a few big name clients, but we just didn't love that environment working with them because we were treated like vendors versus the experts that we are. So anyway, I don't want to dovetail too far, but just want to just kind of state that we need to begin with the end in mind, like Stephen Covey says.
Yeah, definitely. Thank you for sharing that. And you're right. Like it's like, for example, if a client just comes to you and says, I need SEO, it's not like you're just going to take that order and then just submit that order for them and then just do SEO. Like you have to stop them. You have to talk to them. What is it that you want to accomplish? Why? Tell me about your business. Tell me about you. Tell me about your family. Like you would need to know the client's direction, where they want to go, and not just, like you said, not just be a commodity and just be an order taker, how unfortunately a lot of companies are that way. Like if you went on Google right now and you search SEO and then you click on that and you called somebody or somebody called you, it's going to be, all right, how much are we going to, what do you want to do? And then it's just going to be commodified and just submitting an order. So I love how, you're a consultant, essentially you're a coach and you're a consultant to your clients. Darrell, can you give me an example? Let's say, for example, you and I are going to work together. What are some things you would ask me to better understand my business and my goals?
Yeah. So the very first question I'd ask you is tell me a little bit about your ideal customer. So, and the way I describe it when I'm doing seminars or in coaching environments is it's 11 o'clock at night and your ideal customer is awake and they can't go to sleep. And they're concerned about a problem that you solve. What's keeping them awake? And we spend time journaling all of the problems that are significant to your customer, told by you, right? And so we start there because what we need to do with digital marketing is get inside the mind of your customer. See, what you're doing with digital, whether it's Facebook, whether it's Google, is you're now communicating through the internet, the computer, social media, email. You're communicating without that person being present. So before we can do anything, we have to understand what's going on in their mind. So we say we like to draw at the very least what's called an empathy map. That empathy map is what are they thinking? What are they hearing in the marketplace relative to solving the problem, whether it's about your product or service or not? What are they seeing with their eyes, meaning what else are they seeing in their perspective? And then more importantly, what are they saying and doing? And if we can, that's a very high level of how we break it down. We have in fact, our agency, my business partner wrote the book called The World's Best Buyer Persona System, which is available on Amazon, where we go really deep into that. But that's step number one. And so then once we figured out some of those things, we're figuring out what's keeping them up at night. Because if we can figure out what's keeping them up at night is what will likely lead them to Google, because they'll want to solve it. I like to tell a story. If I have a headache, and I want to get rid of the headache, there are numerous ways to get rid of a headache, right? I might want to take ibuprofen. Maybe it's acetaminophen. Maybe I just want to drink some water and try to get hydrated because maybe I'm smart enough to realize maybe I'm not hydrated. Maybe I've got a strain in my neck and that neck pain is causing the headache. Maybe I want to go get a massage. Maybe I want to take a nap and just see if I can sleep it off. There are numerous ways to solve for a headache. But where people make a mistake is they think that their solution is the client's only solution.
Yeah. Yes.
And so I say that you've got it wrong, right? So we want to figure out what's keeping them up at night. And then we want to try to show up and talk to them about all the solutions. Of course, those that we're qualified to speak on. And so that starts the next part of the conversation, which is what are they likely to go search for as it relates to solving their problem? And what a lot of people do, businesses do, is they think they can only solve the problem with their product or service, right?
Yes.
I tell people all the time, the reason my company has both the reason we're an agency is for some companies, they want our team to come in and essentially be their marketing department and just do it all for them. They want us to lead the strategy as well as the tactical execution, report on the facts, and drive the ROI. All they want to do is write a check. I like to say those are my check writers. They just want to write the check and go back to doing what they do best, which I respect. I respect that, right? It's the ones who want to write the check and then participate that get on my nerves. Sorry. That's like us getting on an airplane, right? We get on an airplane as a passenger and all of a sudden we want to go start knocking on the front door where the pilots are. Like, let them fly the plane. They're uniquely qualified, right? And so anyway, you asked about what we ask. So we talk about what's going on with the customer psychology. We want to figure out what are they likely to consider. So we say there's an awareness stage that they have a problem they want to solve. There's a consideration stage, which means they're going to start considering the options available in the market. What are those options? Let's dive deep on those. And then let's figure out what they might do as they get closer to making a decision. Notice I didn't say buy. I said, let's figure out what they're going to start doing as they get closer to making a decision. Maybe that's do a demo on a product. Maybe that's have a meeting with someone, et cetera. And so we try to figure out where in the landscape all of these potential parts of the journey will lie. And we then go to the business and say, here's the plan where maybe SEO pops in now, maybe Facebook comes to the conversation. But so many times we get through this conversation, and obviously I'm truncating it very shortly here to give you just the high level roadmap. But now we start thinking about, okay, where do we show up for them when they are at this stage or that stage? And then let's show them the most appropriate content or information for that stage. A lot of people show up with the right message in the wrong stage. Yeah. You see? So if I have a headache and I say, come to the doctor's office to solve your headache because I'm a brain surgeon, the wrong, right? Is it possible that the headache could lead to something more tragic and there could be something more detrimental going on in the head? Yes. But I'm not coming to the doctor's office for a headache, not at least the first headache, right? I'd have to have some. So we try to do what's called market to message matching. We try to do that also on platforms to make sure that we're showing up properly. A lot of people show up on Facebook ads and things of that nature, and all they want to do is pitch their services. And what they don't realize is someone picked up their mobile phone and landed on Facebook or Instagram or whatever the social network. They were there for their own social experience. Yeah. And you're saying, book a meeting to come to my office. Hello, I'm just sitting here I'm just trying to kill some time. And so that's really the essence of the framework. And then tactically speaking, it's all of the stuff underneath.
Awesome. Yeah. I mean, it makes so much sense what you're saying. You know, you want to definitely understand their goals and you know, what is it that they want to accomplish? How can, so what can listeners expect when they reach out to you? What could they, expect?
A conversation.
Okay.
Sorry, I've been doing this a long time. I've been selling since my early 20s, and I think sales is all wrong. I think everybody does it wrong. You show up, anybody who shows up on a 15-minute call with me, first of all, you can't get any more of my time than that initially, because it's not fair to you. It's not fair to me. We don't talk strategy. We don't talk tactics. We have a 15-minute conversation. And the goal of that conversation is for me to do a few things: find out where you are, find out what's on your mind, find out in short form what would have to happen if it all worked out well to your liking. and figure out if it makes sense for us to have a deeper, more robust conversation. Because as I mentioned, when companies work with me, whether it's me personally as a consultant or a coach, or they work with my agency and my team is being brought to the table, we're going to be committed for a year. We're not doing this, stick your toe in the water. You can go do that with a vendor somewhere. We get people results, and results don't happen overnight. This isn't a magic trick.
Yeah.
Right. This is just like in your business. No one's going to build $100,000 cash value in the first year of the policy. This isn't a magic trick, right? So exactly. I say that most people won't do the hard work of making this is a principle I've lived on for a long time. And that is, we have to be committed to the decision, and then the work to bring that decision to life over the long period of time by just doing the simple things consistently, right? And it's not magic, right? It's work. Don't get me wrong. If I want to lose 36 pounds, 38 pounds, which what I did, a few years ago, I was 30 something pounds overweight. I didn't try to do that overnight. I tried to lose 1 pound a month. I didn't do a crash diet. See, everybody wants to lose 25 pounds in a week and starve themselves and go. I went 1 pound a month. Can I just do 1 pound a month? Can I move a little more? Can I eat a little better? And can I figure out a few other things I can take out of my process and a few better things to put in my process? And I got there. Now, you can go do a crash diet if you want, and you can go do the 6-week thing if you want, but is that sustainable, right? Is that sustainable? So when I say, when we do marketing, are we building something that's sustainable? Are we building an engine, right? We talk in our company about building engines. Can we build a system that runs? I'm a big fan of what fast food restaurants have done. And what Taco Bell taught me was immensely valuable. And it's not just Taco Bell, McDonald's, all of them. Why are franchises in many cases way more successful than the standalone entrepreneur?
100%. Yeah.
Systems. Systems. And here's the thing, what happens with systems. Systems remove discretion of how to do things. There is no ambiguity. We do it like this, and then like that, and then like that, and no discretion. And so to the extent, now we're in creative worlds and business worlds and things of that nature, but systems. So here's my last thing, and I'll say this. Hope your audience loves this. I think as entrepreneurs, if we get to this concept, this is what I teach a lot of my clients. Your job as a business owner is, excuse me, outside of having a product or service that is desirable by your end customer and having a delivery system that makes them happy, your job as a business owner is to build systems that are to be run by people consistently without fail. That's the tweak. I've never gone to McDonald's once. Not that I eat at McDonald's a lot, or it doesn't matter what the restaurant is. I never go there and don't get a Big Mac that looks like a Big Mac. Yeah, exactly. And I love how you mentioned fast food. I'm every time I never go to McDonald's. I rarely do, but I'm fascinated by them, by their drive-through, their menu, everything they say, everything they do is mathematically calculated. It's for a reason. And when you have a system, when you have those systems in place, you remove the emotions, you remove the decision making. It's not like the employees can decide what they want to do. They can't. They have to follow certain things, and that's actually in their favor. It actually helps them when you do that. You're actually helping the employees when you have the systems in place. So I love that. And Darrell, we can keep talking. We can keep talking about marketing, about business, about cash value life insurance. I love it. But how can and I appreciate being on the show. I hope to have you back on soon. How can listeners connect with you and learn more about you? Yeah, I mean, thank you for having me. First of all, I love what you're doing. As I said, we've connected before we got here today, and I just admire the work you're doing, and it's work that is important. Financial literacy, positioning people for financial security. It's something I'm passionate about. I do it on the business side of things, where I help people build businesses that'll leave legacies, but obviously will spin off enough cash to protect themselves with what you do. But here's where people can find me. The MindShift Podcast is where you can get to know a lot more about me and how I think and some of those things. So the mindshiftpodcast.com is where you can find the show. It's also available on every podcast network, Apple, Spotify, Google, Pandora, iHeart, it's everywhere. If you want to connect with me personally, darrellevans.net, darrellevans.net. That's DARRELLEVANS.net. And it's easy. And you can find me on social from any of those platforms. So. Great, Darrell. Thank you so much. I'll be sure to add in all those links you mentioned in the show notes below.
Thank you so much for joining us. I look forward to bringing you back on.
Thank you, sir. Really had fun with this conversation.
To learn more about what we do and how we can help you grow more wealth, please visit www.finassetprotection.com. That's FIN, assetprotection.com. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.